Hi, folks. This is Lee with the Market Sense for the week of July 9th, 2019. The charts in this presentation are provided to us by Gettess and come from their Trade Navigator software. And our first chart here is a weekly bond market chart, and we're kind of in the same pattern we've been in for a couple weeks now. They've come up and made a nice high. They're kind of running out of gas and poking a little bit to new highs, but not really staying up there. You can see last week poked up and closed down again. But it's all sideways so far. There is no real breakdown so far. We do see a little potential kiss here in the momentum indicator suggesting a downturn, but again, no breakdown just yet. And this week, well, this is pretty difficult. Let me say this: the best support we're looking at is around 154.10. It's down here at this lower moving average. And the other thing we'd be looking at is around 156.18 or so, which would be below last week's high. If they can hold resistance there, that would kind of suggests some weakening. Here's the problem we have with these two areas. We have a Federal Reserve Chairman Powell testifying in front of Congress on Wednesday, and then we have the minutes of the last Fed meeting being released Wednesday afternoon. These will be poured over, both his testimony and those minutes will be poured over big time to try to determine what the Fed is planning on doing, how close they are to cutting rates, raising rates, whatever. And they're in a very awkward situation because they're being hammered by the White House to cut rates, and the Fed is notoriously non or apolitical. They don't want to appear like they're trying to appease the White House, so even if they think an interest rate cut is a good idea, they may be hesitant to do so for fearing they look political. It's a really awkward situation for them. But anything that does come out of that, any clue about something happening or, for that matter, not happening, could render either that support and resistance useless. They could get moving pretty fast if they think they get a whiff of something like where they know what's going on. But for now, that's all we can do is look at 54.10 and 56.18 and see how they handle either area if they get there. Stocks have sort of a similar situation, although stocks ran to new all-time highs last week, and you don't make a living selling new all-time highs, so this week has just been inside the last week. That's nothing fearful, nothing scary there. They could have held support here around the 29.79 area. They don't really appear to have done that. They've dripped a fair amount through it, which makes me think that this 29.55 area, that middle moving average, could possibly be in play this week. Although it could be a big break and recover because they have come back quite a bit from the lows of the week so far. The next target on the upside is around 30.13 up here, and I want to emphasize that's a target. I wouldn't really call it resistance. It's again going to new all-time highs, and resistance is just a blip when you go to new all-time highs. There's nothing to suggest that they could be rolling over here yet. But they're not immune to what's going on between the Fed and the White House either. Any move in interest rates, or a signal of a lack of move in interest rates for that matter, could cause some difficulty in this market, and actually could cause them to roll over pretty hard if they dislike it. But if you know what the Fed will do, then maybe you can guess what the market will do. I don't. And if I knew what the Fed would do, I still wouldn't be confident that the market would react the way I think it should. So how goofy is that, right? So that's what we've got for you today. I sure hope you can find something to get yourself into that makes